Hey everyone, welcome back to Forex Crack. Today, I'm going to teach you how to read Forex charts like a pro in just 10 minutes. Whether you're a beginner or have some experience, this guide will help you quickly understand the key elements that drive the Forex market. So grab a pen and paper, and let's dive in. First things first, let's break down what a Forex chart is. A Forex chart shows the price movements of currency pairs over a specific period. It helps traders like you and me analyze the market and predict future price movements. The most common charts are line, bar, and candlestick charts. Today, we're going to focus mainly on candlestick charts, which are the most popular among professional traders. So why are candlestick charts the go-to for most traders? Because they provide a ton of information at a glance. Each candlestick represents a specific time frame, whether it's a minute, hour, day, or week. The body of the candlestick shows the opening and closing prices, while the wicks or shadows indicate the highest and lowest prices within that time frame. If the candlestick is green, it means the price went up. If it's red, the price went down. Simple, right? Now let's move on to identifying patterns that indicate potential buy or sell signals. There are several candlestick patterns that can give you an idea of where the market is heading. Here are the 3 key patterns you need to know. Doji pattern. A doji candlestick has nearly the same opening and closing prices. This pattern indicates indecision in the market and could signal a potential reversal or continuation of the current trend. Watch out for these. Engulfing pattern. An engulfing pattern occurs when a small candlestick is followed by a larger one that engulfs it. A bullish engulfing pattern can indicate a strong uptrend, while a bearish engulfing pattern suggests a downtrend. Hammer and shooting star. A hammer pattern is a bullish reversal signal that occurs at the bottom of a downtrend, while a shooting star is a bearish signal at the top of an uptrend. Both have a small body and a long wick, signaling a possible reversal. Reading candlestick patterns is essential, but combining them with technical indicators can give you an even stronger trading strategy. Moving averages, RSI, Relative Strength Index, and MACD, Moving Average Convergence Divergence, are among the most reliable indicators. Moving averages, these help smooth out price action and can indicate trend direction. A 50-day and 200-day moving average cross is a popular signal for entering or exiting a trade, RSI. The Relative Strength Index measures the speed and change of price movements. An RSI above 70 indicates an overbought market, while below 30 indicates oversold conditions. MACD. The MACD is a trend-following indicator that shows the relationship between 2 moving averages. Crossovers can be a signal to buy or sell. Now that you know the basics of candlestick patterns and key indicators, how do you put it all together? Here's a quick step-by-step strategy for reading Forex charts like a pro. Identify the trend. Use moving averages to determine if the market is in an uptrend, downtrend, or sideways. Look for patterns. Scan for candlestick patterns like dojis, engulfing patterns, or hammers. Confirm with indicators. Use RSI or MACD to confirm the strength of the trend or possible reversals. Set your entry and exit points. Once everything aligns, set your entry and exit points to maximize profits and minimize losses. Before we wrap up, here are a few final tips for mastering Forex charts. Practice on a demo account. Start with a demo account to practice without risking real money. Stay updated on news. Economic news and events can have a huge impact on Forex markets, so stay informed. Be patient and disciplined. Trading isn't about getting rich quick. It's about making smart decisions over time. Reading Forex charts may seem complicated at first, but with practice and patience, you'll get the hang of it. If you found this video helpful, make sure to hit that like button, subscribe for more trading tips, and let me know in the comments what topic you'd like to see next. Happy trading!